Another red day for the crypto markets as geopolitical tensions continue. However, Bitcoin is still sitting just above the 200-day EMA, otherwise known as the bull market support band. I haven't sold any of my positions, but I'm still staying cautious as altcoins are looking weak, although Bitcoin is holding above the 60K level. I'm going to show you what I'm currently doing to best prepare for when this dip ends, when I will think it ends, and I'm also going to drop some game on how you can foresee which layer 1 coin is going to outperform the market this cycle. This information will help prepare you to pick the best layer 1 coins now rather than trying to chase the market when it comes green again. To take it one step further, I'm going to give you the exact blueprint that you can use to find those 20, 30x's within these layer 1 coin ecosystems before anyone else finds them. If you like this type of content, make sure you hit that subscribe button so you can stay up to date with every single video that I post. Now let's jump into the screens. To begin from a macro point of view, we see that Bitcoin is currently sitting above the 200-day EMA, which is otherwise known as the bull market support band. That's currently at 59,892. We wanted to see Bitcoin break the 65K level, which it did on the way up, to show a reverse of trend and a break of structure. Although we wanted to see Bitcoin hold above the 65K level, we did know that there was a chance of it coming down, take liquidity, and stop out any late longs. We do want to see it hold this bull market support band. However, as long as it's above the previous higher low, we're still making higher highs and higher lows. If we start coming to close or wick below this level, we're starting to make lower lows, which is something we don't want to see. Rec Capital is saying that on the 24th, that the downside deviation is over. And that's every time we have these orange wicks going below the range low. Up to today, he's saying we want to see Bitcoin hold above the 60,600 level, and that would fully confirm that a reclaim of the reaccumulation range without the need for another bargain buying downside deviation below it. Again, these orange wicks. So we have here in this green line is the range low and range high of that time frame, and we don't want to see another deviation of this going down. So if we're able to hold this at 60,600, it means that we can reclaim the reaccumulation range without the need for another downside wick. From another macro point of view in relation to Bitcoin, Jack Mallers, the founder of Strike, saying the Fed has begun to cut rates. What does that mean? Financial authorities have decided who is paying for their mistakes, and it's those holding US dollars. Get out of dollars, Bitcoin is the exit door for everyone. And what does that mean? Well, the Fed is cutting rates because they need to spur the economy on, especially if they cut rates too quickly. This can lead to inflation. And what does inflation do? Deflation is the devaluing of the currency. And in this example, the US dollar. And a lot of times when there's a devaluing of the currency, a lot of money goes into assets. And that's why assets appreciate during times of inflation. So if you're in Bitcoin and asset prices are going up, that's going to be your protection mechanism, the Fed cutting rates. But if you're just sitting in cash, just holding US dollars and not holding any assets, whether it be real estate, whether it be stocks, whether it be Bitcoin, then you're just going to be devalued. All of your money is going to be debased. That's what Jack is saying. Get out of dollars. Bitcoin is the exit door for everyone. Don't let them shake you out. I showed this type of chart before or something similar in many of my videos, and that is the price of Bitcoin follows global liquidity. As you can see here, as global liquidity increases, so does the price of Bitcoin. And that's because Bitcoin is a reflexive asset, it's a risk on asset. As there's global liquidity increases in the market, people put their money into riskier assets, and when global liquidity falls, they take it out and go to safer assets like government bonds. I'm sure you know of the saying, don't fight the Fed. And the reason that the 2020 and 2021 bull run ended was because the Fed started increasing rates. Inflation got way too out of hand, and the Fed had to come in and pull the reins back on the economy. Now the exact reverse is happening. Inflation is under control, at least for now, and the economy needs to be boosted. The Fed is coming in and cutting rates. On top of that, China has just put in 140 billion of stimulus into the economy and doing everything they can to keep the economy afloat. Two largest economies in the world, both going into cutting rates and adding stimulus into the economy. That is a sure formula for the global liquidity to go up. And if Bitcoin has tracked global liquidity like every other time, it should continue to do so. There is no reason why it shouldn't, given that the asset has not changed. Look at whether the Fed is going to cut rates more. This is the data from the Kobesi letter. We know that the Fed is hinging whether they cut rates or not based on the labor market, they have an unemployment rate target of 4.4%, and that's what they're aiming to keep. Anything coming below 4.4%, they don't need to cut rates. If they see something above 4.4%, they do need to cut rates. And of course, we want them to cut rates because it means that there's going to be an increase in global liquidity and therefore the price of Bitcoin goes up. But we don't want them to cut rates too aggressively. We've seen that in the past when the Fed cuts more than 200 basis points, which is 2% within 12 months. 12 months later, after that, the economy is in a recession. So we don't want to see an unemployment rate above 4.5%. We want to see it stable for now so that the Fed can slowly cut rates over time and it be more of a consistent increase in global liquidity. The next three prints, also mentioned in my previous video, we got the September print on October 4th, that's tomorrow. And then in November 1st, we have the October print. And then December 6th, we have the November print. So we have three prints until the end of the year to see what happens with unemployment rate, and there the Fed will base what their Fed funds rate is. There are a lot of signs that the crypto market in the next 6 to 12 months should be up only, given that China is including stimulus into the economy, the Fed is cutting rates, stocks are rising like we've avoided a recession, but gold's rising like we're headed into recession. Gold prices rising like we're heading to World War III, bond prices falling like geopolitical tensions are easing. And then cryptos falling like the risk appetite has disappeared, especially as Bitcoin's holding that 60K price, whereas altcoins are bleeding much more. And then six, tech stocks are rising like risk appetite is at all-time highs. So a lot of confusing indicators in the market. So how can we actually prepare for this? Or what are my thoughts on this? Right now, there's geopolitical tensions that isn't helping anyone. War is terrible for all people, but over a long period of time, especially after all the uncertainty is gone, it is good for markets, as well as we're going into a US election. There's a lot of uncertainty there. Who's going to win? Fred here is saying study strength on this dip. Lots of alts still making lower lows or swinging the highs in accumulation. He gives two examples, one being Phantom and one being Ton. And you can see that Phantom has a clear high time frame market structure change on the BTC pair as well as the USD pair, while Ton is still making lower lows. For an example here, he's using Phantom USD here, and it's making higher highs and higher lows. You can see that that uptrend. Whereas in comparison to Ton, you can see that it's failed to break it. And instead of making, it did make it, let's say, a higher high here, but now it's making a lower low compared to this previous low. So in an example, if you look at three coins here that I'm going to show you in the gaming space, got Beam, Super, and another one is Ultra. As you can see here with Beam, there's a clear break of structure here. So it's made another higher high. And as long as it makes another higher low above here, it's gonna still stay in a bullish market structure, which is around the 0.135, 0.14. With Super here, Super is looking super strong, higher low, about to form another higher low here, and then higher high, higher high, higher highs and higher lows. Very strong bullish structure, and that's what we want to see. We don't want to be buying coins that are, yes, there's an argument to say that we should be buying coins at the very high time frame levels of support, but if they're not looking bullish and they're not even able to break out and make higher highs and higher lows in bull markets, the majority of the time they're going to stay that way. So in bull markets, we want to make sure that we are longing winners because the trend is your friend until it's no longer the trend. Another example here is Ultra. Ultra here is not able to make higher highs and higher lows. You can see that there's not a diagonal to the right. It's not a clear structure. There is no break here. There's a lower high, lower low. I'm about to make another lower low here. Clearly, as you can see, oh, it's at such a low level. Is it going to come back and survive? It's at when it first started in 2021. It's still holding that support. Yes, there's an argument that, oh, what a great purchase from a fundamental level. It's at a high time frame support level. But if it's not able to make higher highs and higher lows, like Super, and is in a clear uptrend in a bull market, it's probably going to stay that way. You also don't need to fully understand TA and trade it every single day. I'm not a trader. I just use TA to understand where I should be entering my trades. So if you look at Beam here, Beam is a good trade because a lot of the times when you enter a trade, your invalidation is at the previous higher low, which means that if I was to enter a trade now, my invalidation point would be below here, which would be basically risking 10%. if I was to enter super right now, which is also looking very strong, if my invalidation point was at the previous higher low, it'd be at 0.77, which means that from this price here, my risk would be 24%. So if I had, let's say I was using 25% here, and I was on 4x leverage, and it came down just a wick, just below to take liquidity, a little slight deviation, and then came back up, I would have lost my entire account. I would have been completely liquidated. So if super came down to, let's say, this 0.83 level, and I was about to enter the trade, and my invalidation point was here, even if I was on 4x leverage, it would be 40%. So I would still be able to be staying in this trade. So you don't want to be entering in no man's land. Sometimes when we're in bull markets, you just want to chase the coin because it's green and it's FOMO, but you never want to be chasing. You also don't want to be entering in no man's land because a lot of people will just see a coin and right now they might just be buying super at $1. But with the understanding of TA, you know that this is not a place to buy. Either you wait for it to break out, let's say on this level here has been a resistance for a while, to flip that resistance, and then you want to buy the retest, okay, that's fine. But you don't want to be purchasing right here, especially if you're using leverage and your risk for invalidation is coming down 23%. Because technically, it could come down all the way to 0.79, 0.78 and be a higher low, still be in a bullish market structure and continue to go up. But by that time, you've already blown up your whole account. Now I want to go over how you can foresee in the future which layer one coin is going to outperform the market. First, understand that. You need to understand what exactly a layer one is. A layer one is essentially a piece of technology that allows other things to be built on top of it. So layer one coins are your Avalanche, Solana, Ethereum, Cardano, all of these things are layer one coins that allow you to build on top of it. And to understand what a layer one is fully, you need to understand the blockchain trilemma. Blockchain trilemma is what all layer one coins struggle with. You can only pick 2 out of 3 of this. There's decentralization, security, and scalability. If you're Ethereum, you went with you want a lot of decentralization and you want high security, but you give up on scalability. Binance is very scalable and secure, but it's decentralized. Solana is scalable and decentralized, but maybe not as secure. It all comes down to what you're using the chain for, whether it's for, let's say, finance and you're spending $5,000, $500,000 at a time on Ethereum. You don't mind if it's not too scalable. You make sure that it's decentralized and it's secure. Whereas if you need something to have a lot of transactions per day and you're not using it for anything too important like video games, okay, it's fine if it's not so secure, but it better be decentralized and it better be scalable. So now that you understand what a layer one is, now we can see why a layer one goes up in value. The layer one first goes up in value because of how much in demand it has. It starts with the demand it has for developers to be building on it. And then once there's more developers building dApps, which are decentralized apps on it, more users come and use it. So if you think of a layer one like a city, and the whole layer one is an infrastructure that attracts businesses into the city. So if lots of businesses are popping up in this city and is becoming really successful, and there's lots of trade going around, going crazy everywhere, there's money flying around, this means that there's demand for the city's currency or the country's currency because you have to be using that currency to be doing business back and forth. So if that currency is fully in demand all the time, the price of the currency goes up. The same way with a layer one. When you want to use Solana and operate on the Solana blockchain, all of the gas is paid in Sol. Same way with ETH, same way with AVAX. So if you think that Solana is attracting all the best developers who are building the best dApps, making the most memes, and there's a lot of users coming on to use all those dApps or trade those memes, they're all traded in Sol because it needs Sol for gas. Take it to the next level to understand what you do with this information is you think about, okay, what are the thriving industries within crypto right now? Obviously, memes was the biggest one this year. You have AI and you have gaming. Now, what do all 3 of these have in common? Memes, AI, and gaming. They need high levels of transactions per second because memes, you're trading in and out of coins all the time. You're trading 50 memes a day. AI, the massive amount of data that needs to go back and forth in the chain, as well as gaming. Someone might be fighting someone, buying an item, selling an item, trading swords, updating skins. You can't be using Ethereum because who's going to use that turd where you have to be using gas and paying $200 for every single transaction? Whereas you can use Avalanche or Solana when you're paying pence. And on top of that, there's also the most memes on Solana. AI is on ETH, as well as a lot of big games, AAA studios are building on Avalanche. For those reasons of what makes a layer one go up and what are the three driving industries right now in crypto, they all lead to Sol and AVAX. If you don't think gaming is going to take off completely this bull run, then that would mark out Avalanche. But we all know that memes was the clear winner and has continued to shine, continued to have the most gains. That leads to Sol being the golden child of layer ones. Whoever wins the AI race is going to take the next layer one chain. Solana has high transaction speeds, means it's highly scalable. It's decentralized. Maybe it gives up a tiny bit on security. If AI really takes off, a lot of AI coins are built on ETH. So ETH can also do well, but ETH has a transaction cost of, in the bull runs, up to 300, maybe even 400 per transaction. So what can we actually do about ETH? Well, there's something called a layer 2. And a layer 2, the whole point of a layer 2 is to help ETH in this section, scalability. Because Ethereum is completely decentralized and very secure, but really slow. So what is the most popular layer 2? It's Polygon Matic. Polygon Matic allows Ethereum to be more scalable because it goes and takes all those transactions and processes them off chain on Polygon and then feeds them back into Ethereum. So if AI is really going to win this race, it needs to win on ETH because all the big AI coins are built on ETH. But obviously, no one's going to use ETH because it's too expensive. So that's why I also think Matic or Polygon, they changed their name. Matic, Polygon, going to win that. So my bet for the two layer one coins that are going to win are going to be Solana, Matic, but I also believe in gaming. So I'm going to say AVAX. That's my take on it. To take it an even step further, we do know that in these layer one ecosystems, there's more than just memes, AI, and gaming. There's DEXs, which is decentralized exchanges. There's DeFi lending platforms. There's oracles. There's all sorts of different types of coins. The reason that I mentioned memes, AI, and gaming is because I know that these were the three biggest winners. If you think that maybe the DEXs or DeFi or oracles are more important, then so be it. If that's what you believe, then go ahead and this is how you go and find them. If you go to defilama.com and come down to top protocols, you can see all these protocols, which are all layer ones, and you can see all the different types of coins that are on there. And it's showing that this is the liquid staking protocol, the lending protocol, restaking, liquid restaking, CDP, DEXs, decentralized exchanges. These are usually the ones, the top DEX on any layer one coin is always going to completely pop off. You can see on Solana, Radium, on BSC, it was PancakeSwap, on ETH, it was Sushi or Uniswap. It keeps going on forever. For Base, it was Airdrome. You find the best DEX on Avalanche, it was Joe here. It's going to pop off, guaranteed. But if you want to look at other things, you can basis trading, yield, farming, privacy, real world assets. That's another one, another sector that's done really well this year. I haven't been paying attention to it as much. I think just paying attention to memes, AI, and gaming is enough to load my brain. Launchpads will do very well, especially if you think a lot of new coins are going to be launching on Avalanche. You can always go and buy one. Zeva launch for Avalanche. Cross-chain, synthetics, indexes. You know the drills. You can just keep going all along here and seeing what the top protocols are on each sector. Pal AI for the Telegram bot. That's a really good one as well. And go and long those. And at the same time, to know when you need to enter, look for your higher highs and higher lows and not buying in no man's land, right? Super, you can buy right here, but you need to go down to that higher low for invalidation. That's 23%. Do you want to take that risk? Maybe not. If you're at Beam, and let's say you see higher highs, higher lows, and coming down to the previous higher low, 9%. Okay, that's something you can stomach a bit more. So that's what you need to pay attention to. Right now, as we can see, there's clearly a lot of mixed signals in the market. So I want to stay cautious for now, especially in the next 2 months. If there's more geopolitical tensions and going to the US elections, as there's still uncertainty on who's going to win, I'm going to be cautious for the next 2 months. But I think from there, given the fact that China is adding stimulus into the market, Fed is cutting rates, and global liquidity is going to go up, I'm not being shaken out of my coins, and I'm going to have conviction. Because there are a few times where you can be a moon boy in this market, and this time right now, I'm a moon boy in the market. Might be proven wrong, and now I'll have to eat my words, but we'll see how that plays out. There you have it. In this video, you should have learned how to spot the best layer 1 coins, what you're going to do about it, whether you're going to go to AI, memes, or gaming. Maybe you want to look at other things such as DEXs or DeFi lending protocols or the big wallets on each chain. Whatever your strategy, I hope it works for you. Curious to see what you thought about this video in the comments, and I'll see you in the next video.